The current yield offering on the 2032 and 2037 papers are not exciting enough to whet investors' appetite. Traders at Axis Bank expect market liquidity to thin out due to funding for the T-bills and retail FX auction. Constance Onya, Treasury team member at Axis Bank, joins me for more market updates. Constance, thank you for joining us today. Let's have you bring us up to speed with activities at the market, starting with the money market.
Thank you, Esther, for having me. Okay, starting with the money market. When the week commenced, we saw OPR and overnight rates open at 12.75 and 11.88 respectively, going down to today with all the fundings that have happened coming from the NTB auction, and then today ahead of the retail SMIS auction that is to hold, we have OPR and overnight rates hovered around 10.88 and 11%. For the interbank market, we've seen a slight improvement in liquidity, and we expect that liquidity to thin out today as this auction is conducted. Going into the fixed income market, on Wednesday there was auction. The DMO offered a total of 57 billion across the 91, 182 and 364-day bill, and a total of 104 billion was sold, and the bulk of this was sold on the one-year instrument, so there was an oversell. And then we had a subscription which was quite high of about 700 billion for people that came for the auction, and this subscription was seen on the one-year instrument. The stop rates came out at 13.05, coming from 14.84 at the last auction, and traders and investors had expected that these rates were supposed to be trading higher, but we saw the rates print out at 13.05. And we saw this bullish trend also affect our markets yesterday, where people also came into the secondary markets to mop up some of the one-year instruments as they lost out of the auction. And so we saw these instruments trade as low as 11% yesterday. We have the DMO going to offer the bond auction for Monday. Yes, so we have a total of 75 billion on each of the maturities of 2032, 2029, and the 2037 papers. We expect this auction on Monday to close relatively around where market is trading now. Currently, we have 2029 bond trading at 14.45 to 14.5 levels, and the last auction was this printed out at 14.75. Traders had expected that we'll be trading at 15% on this instrument, but right now, because of the slight improvements in liquidity, we've seen this trade at 14.45 and 14.5. On the 2032 bond as well, it closed at 15.2, and currently in the market is trading at 14.9 and 14.95. On the 2037 bond as well, we saw it close at 16.2 at the previous auction, and we expect that on Monday this auction might come out around 16% levels. In the markets, we expect this quiet trend for today, though as people expect to focus on the retail SMIS auction that is supposed to happen. And for next week, we expect a slight bullish trend as well, as people continue to use their liquidity to avoid CRR debits on the money market side.
Now, for the SMIS auction, what can we expect? What's the market expectations?
So we just expect that the CBN will continue to intervene in the market, and then we don't expect much, even though people will come for the auction, and then the CBN will probably just intervene as much as they can.
Right. Now, for that, for the bond instrument that you expected, the market expected to go as high as 15%. I was also expecting it to go at 15%. You know, we've seen this trend, as you've seen also, of yields increasing at the market, and traders have spoken to have said, look, they see considerable headroom for an upside, but it would appear that that may not be happening. Obviously tied to liquidity levels at the market. But what can you tell us in terms of how you're projecting or forecasting this going forward?
Okay, so it's like you have mentioned, you're right about it. It's the liquidity presently in the market that we see affecting these yields. Investors' appetites have been that the yields should currently be trading much higher, maybe above 16.5 levels, especially on the 2037 bonds. But being that there's also demand for these instruments in the market, we don't expect to see it go to that level, not at this auction, maybe eventually at the next auction. Our projection is that we'll get to 16.5.
Right.
But for this year end as we are at its stance currently, as this is the last auction for December. So we expect that it will just remain around 16% levels on the 2037 bonds, and on the 2032 bonds we'll see it remain at 15% levels. Investors will just have to probably endure at this time, and maybe come into January next year, we'll see these yields going